Hello, welcome to the KaBoomers Guide to Getting Rewired podcast. The show where we break down real estate investing strategies to help you build passive income and financial freedom. Today, we're talking about the most important investment you should make before buying your first property. And no, it's not a down payment. It's your education. So, if you're brand new to real estate investing, you might be eager to jump in and buy a rental property or join a syndication. I mean, you see it all over the internet. There's BRR methods, there are syndicated methods, there's ways to get into real estate investing with no money down. I mean, it's also exciting and so tempting that the first thing you want to do is run out and pull whatever savings you possibly have and make that first investment. But the idea is that you need one thing to avoid making costly mistakes, and that's an investment in your education. The truth is, without the right knowledge, you could not only lose money, make costly mistakes, but you could also miss out on the best opportunities. So today we're covering the best books in real estate investing. There's tons of them. It's mind-numbing how many books on the subject there are. Then there's also key areas of education, like for syndicated deals. I mean, this is a whole different method of investing, and it's basically a team sport. But the only way that you can do it is to learn, bring value, and participate in a network of other investors where you can pool your money and make these bigger deals come true. There are real estate workshops. There's even university programs. The basic idea is that there's education that's available at every level of interest, and there are ways that you can educate yourself that will never end. I mean, I think investors that have been in the game for a long time are still participating in masterminds and other types of education as they come available, because as markets change, so do strategies. So there's webinars, there's masterminds, as I said, and there's a real expensive cost of this real estate education, but it doesn't have to be such. It could be very detrimental if you invest in too much education before you've even made your first dollar. That's the story that my wife and I have. We basically were doing real estate. We've been involved in multifamily based on duplexes that my wife had invested in many years ago. We repositioned those back when the short-term rental industry started to blossom, and we did really well for about a decade. We repositioned those things, remodeled them, made them just great performers. My wife has been a co-host, not a co-host, she's been a super host on these platforms for 10 years. So that means that she's in a great position as far as the search returns whenever someone's looking to travel to San Diego or to one of the cities that we have rental properties in. And so that's been a great way for us to maximize the cash flow from these properties. But those cycles are starting to change. We're now doing midterm rentals, furnished midterm rentals. So the education that it requires is continuous and nonstop. So basically, we decided to level up, get involved in bigger assets where we're going from duplexes to 10-door apartment complexes, 20-door, 40-door. We've been studying literally how to become involved in a syndicated deal that could take down a 200-door apartment complex that might have over $1 million worth of NOI income per year. How do you get involved in those? You have to get education. So besides the books, there's a myriad of different specialty platforms where you can get education. So as Warren Buffett says, the most important investment you can ever make in yourself is in yourself. And that's especially true in real estate. And here's why. Avoiding the costliest mistakes. I mean, many new investors lose money because they don't understand the financing, market cycles, or property management. The idea here is that people will be able to make fortunes in real estate because there are an equal or even larger amount of people that are going into it blindly, without any education, buying properties, ending up getting in over their head, defaulting on the properties, or managing them poorly so that the performance of the property just literally wears them out. And eventually they might have a 20 or 40 or even a 100-door apartment complex trying to self-manage that. That kind of approach to it creates new opportunities for new investors to come in with fresh approach, new technologies, or basically literally just a better plan and better fiscal management of a property and make a fortune. So as long as there are people buying properties without education, there will be people that are benefiting from these opportunities that have studied a little bit. Even reading a couple of books is a big advantage over somebody who has never read anything but suddenly had a few bucks that they could invest in property, like maybe from their 401k, and boom, they're all of a sudden investing in properties and making those kind of mistakes that will lead to opportunities for future investors with a little bit of knowledge. So the other big problem is, besides avoiding the costly mistakes of buying things wrong, is you can greatly overlook the best deals. So the best deals are, again, the ones that are distressed or the ones that could be repositioned. And those go to the investors who know how to analyze them. There's a number of ways to increase the profits of an apartment complex. One of them is through cost savings. The other is through increasing the rents. Sometimes increasing the rents requires some capital expenditures to fix the property up so that it can be repositioned and be rented for a higher rentals, and that has a magical increase in the value of that property 5 years later when you go to exit the property. Now, the only way to do that is through education. So to even begin to operate at this level, you have to build confidence. So from this education, reading books, taking courses, belonging to masterminds, you gain the knowledge to help you make better deals, negotiate better deals, to raise capital. If you're going after a $10 million or $20 million apartment complex, you better know how to raise capital so that you can participate in a syndicated deal on this apartment and be able to pull this off. Now, because raising capital is a security, you need education, you need legal counsel, you need all the things that go into making these deals work. But it's not rocket science, but it does require you studying a bit and figuring out how to find partners, how to find networks, and of course, how to grow with a control that will allow you to scale so that as you build your business, because this is what you're doing, is you are building a business. You're buying businesses, building businesses. The real estate business is not really what you're doing. What you're doing is you're going out and acquiring operating businesses that are earning income from rents. And these rents can be, they basically are the source that banks see as the method of repaying loans. So if there's a $10 million property and you put together a deal where you can borrow 70% of that, or $7 million from a bank, and you go out to partners, limited partners, and bring in the other $3 million in capital to rent that. The bank's going along with that, and the investors are going along with that because it's a business. It's a business that can self-sustain through the rents and pay for itself. So how do you do that? Well, buy a few books, take a few courses, and you'll learn how. Now, the top books for real estate investors, there's many, but one of them that's really important kind of is to get to the mindset of what this is all about. And basically, Rich Dad, Poor Dad, written in the late 90s, is an excellent book. It's a book I certainly wish I would have read back when I was in business for myself, a technology business, and making lots of good money, but I didn't realize what to do with it. And of course, things happen. Economies change. And so had I known to start investing in properties, I think I would be in a much better place, much different place. I certainly would have gotten here faster. So then read on, right? There's just the titles are endless. Millionaire Real Estate Investor by Gary Keller. It's a wealth building principles book. Atomic Habits by James Clear. Now, is that an investing book? No, but you do have to develop new habits to become a successful real estate investor. The discipline of deal flow, researching deals, finding deals, networking with brokers, networking with banks and insurance companies and insurance brokers. It's very important to maintain this entire network. And of course, then your core team of the people that you are literally going to go into a deal, into a legal structured deal to pull down a property of, literally tens of millions of dollars. It's possible, but you have to have that basic habit of following all these processes that go into making these deals happen. Now, the real estate investing books go into all kinds of specialties. One of the first ones that you should understand is there's a book called The Book on Rental Property Investing. Now, that's the key word, rental property. So we're not talking about, your basic house or having, like some kind of land that you're sitting on that's going to appreciate. I mean, yeah, sure, those things do appreciate, but we're talking about rental properties that are literally businesses that are sitting on top of land and a building. These assets are literally producing rental income from their tenants, from the residents of an apartment community. So having these type of assets are life-changing because, first of all, as soon as you invest, as you perform the operations of the business, as you get it stabilized, it right away starts throwing off rental distributions that come to you quarterly. I mean, the business has to pay for itself, of course, but the surplus cash is not just sitting around in a bank. It literally is distributed out to the investors, both the limited partner investors, which brought capital to the equation, and then the general partner equity holders that are literally doing the legwork, all the heavy lifting. They put the deal together. They sought the bank debt. They put the insurance in place. They literally made the entire deal work. Those people are literally the foundation of the deal, and that's what they're earning is the sweat equity that goes into it, coupled with the liquid equity of the limited partners, make this whole thing work. Other books, The ABCs of Real Estate Investing by Ken McElroy, Commercial Real Estate Investing by Dolph DeRoos. These books, they will give you a strong foundation before you invest a single dollar. So now there's other areas of education for syndication. So if you want to invest as in or sponsor syndications, you need expertise in three key areas. Capital raising, basically not just capital raising, but how to structure deals that comply with SEC regulations, because you will be attracting investors, both accredited and non-accredited, but these all have to be done under the scrutiny of the Securities Exchange Commission, because this is literally a equity that has to be controlled along the same laws that a stock would, but this is done under an exemption. So then there's asset management, literally after you take control of the property. I'm not talking about the property management, fixing toilets and collecting rent checks and all. That's property management, and that's something that's done for hire on a percentage. But I'm talking about asset management, knowing where we are in the debt, putting the capitalization plan in effect, making sure that all of the rehab is being done, any of the interiors that are being upgraded or renovated. Any of the deferred maintenance that a property needs to be able to buoy those rents and take it to a higher position. All those things have to be done and managed by the asset manager, which is part of the general management team. Now, the other part of it, and this is really something that never stops, is the acquisitions. Underwriting deal after deal after deal, week after week after week, searching for those deals that will be worth going through the full process, making an LOI, trying to put in an accepted purchase agreement, and getting this deal under contract so that after the due diligence, as you're bringing in all this capital that you've been nurturing, all these investors that you've been nurturing, that you can get this deal to the finish line and close and take possession of this income generating asset. It is a team sport, and it's based on the skills of every single partner that goes into the deals. So to be a good partner in these deals, to bring value, you have to get this education. So now, formal education, that accelerates the learning. And here are some of the top programs in communities. UC Berkeley. So from university's level, I mean, you literally can go to college. What a better way to do it? So UC Berkeley has a real estate and finance and development program. It's rigorous, but very expensive. Of course, Harvard's Extension School, they have a real estate investment program. It's prestigious. Wisconsin State University has a great real estate program. So there's numerous colleges around the country that offer real estate investing as a curriculum. Now, that's a 4-year degree, right? Or that's, part of a 4-year degree. But there's other ways that you can go straight line to get involved in investor communities with mentors. Some of the big obvious ones are Grant Cardone's 10X movement. Of course, great skills for sales, for, passive investing or passive income investments, very expensive. Dave Lindahl, same thing, focuses on multifamily, strong acquisition strategies, multifamily mindset, which is Tyler Devereaux's Investor Financing Academy. All of these schools are typically going to cost you anywhere from $25,000 to $50,000 to get enrolled for their mentorship programs, which should include coaches. They're structured learning. They're very specific, very concise to every single step of the process of getting involved in multifamily investing, and a community of students that can become future partners. Plus, the mentors are there waiting for you to find deals in your backyard and bring them to the group, and maybe they will co-invest with you. So that's a big draw to those programs. But again, I have to point out, they can be very expensive. In our case, we got enrolled in one. Ultimately, we spent, I think, altogether with this course, it started out with, a $3,000 investment that led to a $40,000 investment, followed by a additional $6,000 investment, then a $27,000 investment, plus some other smaller investments along the way, to where we ended up with just one group spending close to $75,000 in education. And we still haven't done a deal with them. Now, there's other ways to do this. There's webinars. There's the Bigger Pockets webinars. There's Bigger Pockets content that has, they're great publishers of books, podcasts. There's real estate syndication masterminds, which again can become very expensive, from anything from $5,000 to $25,000. But the high level networking that comes with this can make a difference in this education, because again, it is a team sport. Now, here's a rough breakdown of costs. Of course, books, but by the time you get your 10 to 20 books that a typical library has for this subject, you're going to be spending, $100 to $300. Online courses through Bigger Pockets, Udemy, and others can be $500 to $5,000. Workshops and events, those are $1,000 to, like a Grant Cardone level, $10,000. And then masterminds are literally $5,000 to $50,000. And they lean closer to the $50,000 mark. So be very careful about what you sign up with for. Get some early education just through books and webinars online before you invest in a major networking group that will literally cost you tens of thousands of dollars. So, real estate investing, it's not a get rich quick scheme. No, it's a skill. And like any skill, you have to learn before you earn. Your first investment shouldn't be a property. Again, it should be in yourself. And here's your homework. So pick one book from today's list and read it this month. Join a free webinar in a local real estate meetup. Before you buy anything like a property, study the market cycles and underwriting. And if you get value from this episode, share it with a fellow investor. And if you're serious about passive income, keep learning, because the best deals go to the most prepared investors. So until next time, this is Thomas, your host with the KaBoomers Guide to Getting Rewired. Keep investing in yourself.